Welcome to Inspiring China, a channel that brings you insights of technology, business, and lifestyle. Do share and subscribe if you like it. Your support is my motivation. In 2020, China's stock market celebrated its 30 years anniversary. Today, the total number of investors has reached 177 million, with a monthly average increase of 1.6 million, accessing the world's second largest stock market. According to iMedia research, China online investors could grow to 129 million this year. The COVID situation has accelerated brokers to go online rather than relying on the physical branches and face-to-face services. The overall securities industry netted a total income of $18 billion in securities trading, with an increase of 47% from previous year. Fund sales has realized an income of $2 billion and 169% increase, and investment advisory profited $5 billion with a 9% increase from previous year. The US-China trade war did not slow down the pace of Chinese companies going IPO. In 2020, 396 of them were listed in China and 166 were listed overseas, including Hong Kong and the US. A 53% increase of fundraised as compared with the previous year. In China, there are three major types of securities firms, as shown on this page. Incumbent or traditional brokers dominate the local stock market. By end of 2020, out of the 113 brokers with total revenue of $68 billion, most of them are profitable. 11 of them with market capitalization of $15 billion, and around 10% of the brokers are JV that partner with global investors. With recent foreign ownership restriction lifted, many of these JVs will eventually be 100% owned by the foreign partner. A second type of brokers are technology firms that entered the securities industry. Most of these players started as market information providers, accumulated a sizable user base, then grow into brokerage business through acquisition or license application. The final type is digital brokers that focus mainly on overseas securities market. Huatai Securities, one of the top incumbent brokers with full service for the institution clients in the domestic market. In 2006, they have also expanded their footprint in Hong Kong and now also a licensed broker in the territory. There are 9 more major Chinese brokers have branches in Hong Kong. All except 3 are profitable. These mainland brokers have both client relationships and network in China. It gives them an advantage when Chinese companies going overseas. Owing to capital control, Chinese investors have limited choice in stock market investment, i.e., they can only invest in local markets or A-shares. However, in recent years, the country is gradually opening access to overseas securities market as its first step through Stock Connect. Historically, access to China's mainland capital market by offshore investors has been restricted through investment quota limits and local currency controls. Chinese retail investors were not allowed to access overseas stock market for the same reason. Stock Connect allows both northbound or foreign investors to trade Chinese stocks and southbound or Chinese investors to trade Hong Kong stocks trading. A similar scheme has been introduced 2 years ago for fixed income products called Bond Connect. Similarly, Bond Connect is also available for investors from mainland China and overseas to trade in each other's bond market. London Connect was on trial in 2019 and currently on hold. Before China is fully open to the global securities market, these are the limited channels and investment vehicles for local investors. While most of the Chinese technology companies busy establishing their foothold in local market or expanding the market reach within China, the digital brokers spotted the investment demand and business opportunities by bringing overseas stock market access to local investors. It is not difficult to understand why these local tech firms do not set up a brokerage that targets the local securities market. DBS Securities, one of the latest foreign firm established in China recently, has injected $230 million for the new company, which is not a small sum. Secondly, there are 113 Chinese securities firms already in a cutthroat competitive market, and newcomers need to be patient for profitability. Thirdly, with China accelerating the financial market reform, more large global firms are already entering the local market. Obtaining brokerage license in China still takes time and effort. Finally, incumbent brokers already started collaboration and strategic partnership with fintechs. All of these criteria indicate that China's securities market landscape may go through a sea change in the next 10 years. Thanks for watching. Don't forget to leave your comments. See you in the next episode.